All right, let's talk about one of the most famous tools in all of finance, Bollinger Bands. But here's the thing you've got to understand. They're not just some lines on a chart. They're really a whole philosophy, a way to actually measure the rhythm, the very breath of the market. We're going to dig into what their creator, John Bollinger, really meant for them to be, and I'm betting it's not what you think.
So that brings us to the big question, the one that really frames everything we're going to talk about today. Are these bands just a simple signal telling you when to buy or sell? Or is there something much, much deeper going on here? A way to really get in tune with the market's natural pulse?
Because let's be honest, the vast majority of traders get these things completely wrong. They just treat the bands like a simple on-off switch, and that was never, ever the point. So we're going to cut through all the noise, get past the myths, and get to the core of the powerful mindset John Bollinger wanted to share with all of us. So here's our roadmap. We're going to start with this idea of the market's breathing room. It's a game changer. Then we'll look at how Bollinger took analysis from a static world to a dynamic one. After that, we'll break down exactly how the bands work, cover 3 of the main strategies, and then hit the most critical piece of the puzzle, the confirmation rule. We'll wrap it all up with Bollinger's lasting lesson for every single trader out there.
Okay, let's dive into that first big idea. And for a second, I want you to forget about charts, forget about lines, and just think about rhythm. Think about breathing.
This right here, this is the key. You see, John Bollinger didn't look at the market like it was some cold, mechanical thing. No, he saw it as a living, breathing organism. You know, sometimes its breath is calm and shallow, and other times it's taking these deep, powerful, volatile breaths. The Bollinger Bands, they were literally designed to measure that breath, the market's constant state of change.
And to really get why this was so huge, you have to understand what the world looked like before Bollinger Bands. You have to understand the fundamental problem he was trying to fix.
Man, this really shows the massive shift in thinking. Back in the day, analysts used these static, rigid bands. They just take a moving average and draw lines, say 3% above and below it. They were basically telling the market, hey, you should be trading in this range. But guess what? The market doesn't care what we think it should do. Bollinger's approach was completely revolutionary because instead of telling, it asks. By using standard deviation, the bands come alive. They get wider when things are crazy and volatile, and they shrink when things are calm. They adapt in real time to what the market is actually doing.
And this quote from the man himself just nails that philosophy. It's the entire soul of his invention right there. It's about listening, not shouting. It's about reacting to the reality in front of you, not trying to force your opinions onto the chart.
So, how did he pull it off? How did he create this elegant solution? Well, the way the bands are actually built is surprisingly simple, but it is incredibly powerful.
It all comes down to these 3 lines. That middle band, that's your baseline. It's just a simple 20-day moving average. Now the upper and lower bands, those are plotted 2 standard deviations away from that middle line. And standard deviation is just a fancy stats term for how spread out is the data. So if prices are all over the place and volatile, the bands get wider. If prices are tight and calm, the bands get narrower. It really is that straightforward. And here's where the magic really happens. Because of the way the math works, more than 90% of all the price action is going to happen inside those 2 bands, and that's what makes them so powerful. It means that when the price does break outside the bands, it's not just another tick on the chart. It's a statistically significant event. It's the market yelling, hey, pay attention. Something unusual is happening here.
Okay, so we've got the what and the why. So how do we actually put this stuff to work? Bollinger himself laid out 3 core strategies that come straight from understanding how these bands behave.
First up, we've got the squeeze. And I want you to think of a coiled spring. When those bands get really tight, it means volatility has just vanished. The market's gone quiet. Bollinger's big insight was that these quiet periods are often the calm before the storm. The squeeze is your heads up that a whole lot of energy is getting stored up, ready for a massive breakout. Now this next one, oh man, this corrects a huge misconception. So many traders see the price hit that upper band and they immediately think time to sell. But a lot of the time, the exact opposite is true. When a price is so strong that it's literally pushing against the band, walking the band as they call it, that's not a sign of exhaustion. that's a sign of incredible strength. It's confirming a powerful, sustained trend. Now, of course, the bands absolutely can help you spot reversals, but it's not about a simple touch. No, you have to look for very specific patterns. The two most famous are the W bottom for potential moves up and the M top for potential moves down. These patterns use the bands to give you context and help you spot these high-probability turning points. So let's break down that W bottom, because the details here are everything. First, the price plunges and makes a low that actually closes outside the lower band. That's your big panic moment. Then you get a little bounce. After that, the price drops for a second test, but, and listen, this is the most important part, this second low stays inside the lower band. That failure to push lower shows that the bears are running out of steam, and it signals a potential major reversal to the upside. And that brings us to what is, without a doubt, the single most important lesson from John Bollinger himself. Seriously, if you take only one thing away today, make it this.
Let that one sink in for a second. You do not open a trade just because it touched the bands. Confirmation is always required. That is the golden rule. It is the one thing that separates the amateurs from the pros. The bands give you the context, they set the stage, but they are not the signal itself.
So let's make this crystal clear. The wrong way to do it is simple. Price touches a band, so you hit the buy or sell button. That's a recipe for disaster. The correct way is a two-step process. Step 1, price touches a band and you say, okay, interesting. Step 2, you look for confirmation from a totally different indicator. Only when that second indicator agrees with what the bands are hinting at, only then do you have a potential trade setup.
So what kind of confirmation are we talking about? Well, Bollinger himself recommended using indicators that measure something different from volatility. So you could pair his bands with a momentum indicator like RSI or a volume-based tool like on-balance volume or the money flow index. The whole point is to get a second opinion from a tool that sees the market through a completely different lens.
And this all leads us to the final and maybe the most important lesson of all. It's about taking all these ideas and building a system that is uniquely yours.
So let's just boil down the core wisdom here. First, never, ever rely on just one indicator. Ever. The real power comes from combining them. Second, use these tools to train yourself to listen to that market rhythm, to its breath. And finally, remember that no single strategy works for everyone. You have to test, you have to tweak, and you have to adapt every single idea to fit your own personality as a trader.
And that right there is the ultimate takeaway. John Bollinger gave us this incredible tool and this powerful philosophy, but he also left us with a challenge. The bands can be your map, but at the end of the day, you are the one who has to navigate. He taught us how to listen to the market, but maybe his greatest lesson was showing us that we all must chart our own path.
Thank you for watching our video. In the next episode, we will examine the journey of another legendary trader. Don't forget to subscribe and turn on notifications. For more content and strategies, you can join our Telegram channel. The link is in the description. Stay well.